Ladies and gentlemen, they say a person has many dreams, whether it's wealth, relationships, cars, but a sick person only has one dream, and that is a dream that I've been waiting to have fulfilled, and that is just getting healthy again, because since the beginning of the pandemic, I finally caught the COVID, folks, and it has been a rough and wild week, but there's one thing that I took into appreciation that I never really took into as much appreciation before, and that is this freaking Apple Watch. You know, since Apple recently just launched the new Apple Watch, the new iPhone, nothing that I'm personally going to be buying. It seems to be very knitted toward a certain audience. However, this thing, I was monitoring my blood oxygen levels, my heart rate, my sleeping patterns, which if you take a look, were highly inconsistent over the last week, making it impossible to have the energy to actually make videos for you guys. But nonetheless, today, now that I've got the energy, I want to dive into something that is making you exuberatingly rich. This pattern will continue if something continues to happen in the market, and absolutely nobody is talking about it, as everyone seems to be fixating on what's going on in China, all these, commodities and everything continuing to crash, and everyone's really confused, but they're not talking about this, and I'm going to share that information with you because it has a lot to do with the money in your pocket. Now, if that is a conversation you can appreciate, in return, I simply ask that you hit that like button, folks, because first and foremost, take a listen to this, because this is how all of us thought this recessionary period was going to go.
To this upcoming recession?
There's going to be a recession, no question. But all the assets are going to increase in value. It's a complicated formula, but stock market, real estate, diamonds, art, everything's going up. Any asset is good. Leaving money in the bank is just going to dissipate.
Now, let me tell you why he thought that. Now, obviously, many people thought that. We all thought that, in a recessionary period, inflationary environment, assets go up in value, boom, buy everything. And that turned into being a big bust. Whether it was crypto, Pokemon cards, or the S&P 500, ain't nobody making money on assets here. And I think this has a lot to do with kind of growing up in that Arnold Schwarzenegger time area. And what I mean by like the 1980s. If you ever listened to Arnold Schwarzenegger, he basically said before he became a big movie star, so he wouldn't have to beg for roles that sucked, he decided to get rich in real estate because it was the 1980s. Inflation was out of control. And apparently everyone was running to real estate as a hedge against the inflation, driving up the real estate market. Though history rhymes, it certainly does not repeat, and that is not what we're seeing in this current recessionary period. But there is one thing of all the assets that is just printing money right now, and it's kind of incredible to think about what that is. But just take a look, because the S&P 500 is still down 15.2% year to date. It's going to be incredible if we finish the year. We're heading into the last quarter here, and it'll be nuts if we finish the entire year in the red. Same with the S&P TSX, is down about 7% on the year. But there's one thing rallying aggressively this year, and that is the US dollar. This is one of the most counterintuitive things I've ever seen in any market cycle, and apparently it's happened more than once. And I'm going to break down some of this data for you, because the US dollar is up almost 20% since the beginning of the year, sitting around 95 points at the beginning of the year, and it hit a peak of about $1.10 here, which is crazy, which means if you just decided to put cash in the bank, not only would your global purchasing power have increased by 15 or 20%, but the value of you being able to purchase assets like stocks and things globally, obviously exponential as the value of those things decreased, as people have been selling them off and running to dollars. Now, what's causing this is obviously there's a lot of global fear. We're seeing the Chinese housing market potentially collapse, a lot of fear in a lot of different global markets with Russia, the Ukraine, the geopolitical events. So what do people do with their money? Well, they run to US dollars. And now that the interest rates are going up, they're also running into government-backed debt with bonds, guaranteed investment certificates, things that are yielding 4 to 8% that is all backed by the US dollar. So it's really pressuring this up. And for as long as interest rates are going to keep going up, this is going to keep happening. Though I think we're probably starting to see the peak of interest rate hikes. However, let's just take a look at those interest rate hikes, and we're going to take a look at the long chart. So here's a long chart of the US dollar. And I want to show you how this almost directly correlates, not for one, but very closely to what happens with the dollar. So for example, here in 1980, guys, when inflation, was out of control, we saw that the actual US dollar value, again, so first and foremost, this is the interest rate. So we saw this was when they Paul Volckered us, I guess is the saying in the US, where they raised the interest rates to absurd levels as high as 20%. But what that did, again, take a look at the US dollar chart here, that also drove up the US dollar value to pretty absurd highs. And every time they started to lower the interest rate, we also saw a lowering of the US dollar value. But in every historical crash, there's one cool correlation. The dot-com bubble here, guys, we can see that the interest rates were relatively flat leading into 2000 here. And then as the dot-com bubble hit, they started raising the interest rates just slightly before the burst happened. And then they decided to lower the interest rate. And we can see that looks exactly the same kind of during the 2001 era here, guys, where the interest rates started to go up a little bit. We saw a lot of strengthening in the US dollar. And then boom, they lowered the rates coming into the early 2000s. And sure enough, the US dollar in the early 2000s tanked, guys, and we saw the same thing in 2008 here, where all of a sudden, guys, take a look at this, because 2008 they were raising the interest rates coming into that financial crisis, and we can see that the US dollar went up in value, and then out of nowhere, boom, the huge bust cycle happened because they lowered the interest rate virtually to zero, and that again lowered the value of the US dollar, because obviously if cheap money is available in the market, that cheap money is flowing into assets. And now let me just zoom in a little bit to a 3-year chart just so we can get a little bit more accuracy on the US dollar. Let's take a look. So take a look at the 3-year chart here, because if we take a look from basically 2020, which is very reminiscent again of what's happening here, we can see they just started raising the interest rates, right? So basically they were raising the rates again. The March 2020 hit, everyone freaked out. They made money cheap. They lowered rates to zero, and then they only just started raising them again. And we can see that going back to the DXY chart on the 3-year, we can see coming into the pandemic, guys, where they lowered those rates, all of a sudden the dollar fell off a cliff. They started raising rates again, and then all of a sudden, boom, coming into 2020, we're seeing this explosion in US dollar value. And this is so intriguing to me because we can see how it directly relates, especially if you live outside of the US, how that relates to your own personal currency, because you can really only compare currencies to currencies. And we can see comparing the Canadian dollar to the US dollar, because the US dollar has been rallying so aggressively from peak to trough, there's been about a 6% difference in correlation. From a year-to-date basis, though, let's just take a look. It's about 3.4%. Now, we can see this directly correlate with Canadian hedged investment. VFE, for example, is exactly the same as VOO, the Vanguard S&P 500 index, but it is represented in Canadian dollars and is Canadian hedged. And what we can see is that year to date, VFV, because it's represented in Canadian dollars, is only down 12.81%, because again, it's hedged against the US dollar, which is kind of confusing until we actually look at the VOO, which on a year to date basis, guys, is down 14.91%. So the cool thing is you think that you might be outperforming, and you are outperforming if you're Canadian holding U.S. assets, because the Canadian dollar is getting weaker and weaker to the U.S. dollar, which means those U.S. assets have a stronger purchasing power here in Canada, which again, we see represented in VFV. But the cool thing is if you just held VOO in U.S. dollars and you sold VOO in U.S. dollars and converted to CAD, you'd still end up in the same converted period. It's just that with VFV, you don't have to do any conversion. It auto does it for you. So you're actually outperforming as a Canadian holding those U.S. counterparted, currency based assets. So it's really neat to see that you want some global diversification in your portfolio. This is very hard to wrap your head around, and me and my kind of COVID fogged mind is hopefully explaining this in a way that you can understand. But taking a look, guys, how we're finishing the week or going into next week, it's always neat to see these volatile rallies. The VIX has been insane this year. I mean, take a look at the volatility index. It's been one hell of a roller coaster, right? And the volatility index, guys, is just representing the buying and selling and just the insane amounts of in and out of stocks and crypto and what everyone's doing here. Because I mean, we look at crypto's rallied really aggressively this last week, or basically in the last couple days, and everyone's like, oh, we're finally going back to the moon, and then you zoom out and we're really not going anywhere. But I hope the market stays suppressed personally. As much as I like seeing the green, I'm much happier when everything stays down, because I do enjoy this period of being able to cost average back into the market at much better prices, especially considering the US dollar is getting stronger. I have a lot of US dollars sitting around right now that I'm looking to invest while I finish up my corporate taxes, which should hopefully be done soon. I keep saying that. It's been a bit of an ordeal, but nonetheless, folks, it's just so interesting and fascinating. Something that no one's talking about, that I'm just trying to bring to the forefront of the light. And I want to know what you think about that in the comment section below. And I'm going to spend next week trying to make some more content for you guys, get back in the game. I wanted to do some live streams, and I thought this week would be the first week I'd start up live streams again. But again, I really didn't think that, when I thought about getting the virus, I didn't think it would be as bad as I thought it would be. But man, was it debilitating. Like, I couldn't walk. I couldn't really do anything for 3 or 4 straight days. It's kind of wild. But on that note, I'll pass the question off to you. I'd love to know what you guys think about all of this in that comment section below. But stay cool, stay awesome. And as always, I look forward to catching you in the next one.